You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, these days, everything's uncertain. Investment situation out there, the landscape has changed. Inflation become a big factor. So maybe, just maybe, the market isn't where you want to have all your dollars. And if I know many of you out there, I get these questions regularly. You've got large retirement accounts, often 401ks, or you've got these stranded IRAs or 401ks from where you might have worked before. And basically, you're a little confused what to do. So got somebody here who is an expert in all of this, far better than I. He works for the Entrust Group. You find him at theentrustgroup.com. His name is John Paul Ruiz. And if you're not familiar with the Entrust Group, I believe, John, correct me if I'm wrong, you're the largest self-directed IRA custodian out there.
I would say we're one of the largest, but we've been around for about 40 years. So self-direction is not a new thing. It's just that the Entrust Group has put forth an effort to make it available to the masses. So even though it's been around since 1975, with the birth of IRAs, self-direction is still an unknown ocean out there for individuals. But now that the over 78 million baby boomers are thinking about retiring, the appetite for alternative investments, in other words, anything beyond the securities market, is becoming more popular for their appetites. Why? Because some people are saying, with up and down in the market for the last 20 some odd years, is there anything else are there any other options that I could invest in when it comes to retirement plans, especially right now with tax deferred growth of retirement plans? It is essential to have something that's stable, especially for people getting older. You're not old, but they're not young as well. So they're in the preservation part of their stage of the retirement journey. Preservation meaning I just want to keep what I have, and if I could grow it, even better. Or maybe yet, if I can drive by the investment that I actually invested in, instead of my investments being, under the tutelage of some sort of money manager I've never met. An alternative is something that, just like I said.
Sure. And I have a very close friend. She owns a number of Airbnbs down here in South Florida, and she owns several of them through her self-directed IRA. And it's turned out to be an unbelievable return on investment. Airbnbs are so hot. When we had the pandemic and everything closed down and we started with the stimulus, I knew that basically inflation was going to kick up and real estate was going to be a place to be. Is that the leading investment that most of your account holders have put money into?
Real estate is still one of the most popular ones because people understand, right? So when you start going into alternative investments, a lot of people are saying, I've invested in particular investments that my lawyer may have chosen, but now it's my turn. I'd like to invest in something I can put my arms around it. And real estate's one of the most common ones. Why? Because some people go home to it every night. So they know the ups and downs of a piece of real estate, but they also know the stability of a piece of real estate because, again, you can go home to it every night. Of course, it's not allowed under an IRA, but it's something that they're very familiar with, right? So a piece of land is not going to go anywhere. God doesn't make it anymore. That's why it is still one of the most popular types of investment out there in the industry today.
Yeah, and I've known a number of people that have used their self-directed IRA to buy income-producing property. It has all of the great tax deferral mechanisms that you kind of alluded to. One thing people are always thinking is, do I just cash out my IRA and put it into a Roth? Or How do I do it? You have self-directed traditional IRAs and self-directed Roths, right?
Correct. I mean, let's just demystify the term self-directed. The self-directed term is just a marketing term. All traditional IRAs and Roth IRAs follow the same rule in total revenue. So, but what makes the self-directed world different than any other provider? We work a little bit opposite than some of the IRA providers out there. IRA providers get into the business, such as your broker dealers, your banks, because they have investments that they want to sell to you. Unlike those particular types of providers, self-directed administrators do not sell investments, but instead offer the platform that allows for the investor to choose whatever investment they would want to hold under their IRA. So it gives you the flexibility to invest in just about anything, not just real estate, private placements, notes. But yes, all the rules that are applicable to traditional IRAs and Roth IRAs apply to self-directed accounts. Let's not forget also the IRA-based employer-sponsored plans, such as your SEP plans and your simple plans. Even though some people are retired, some people are making more money in retirement than they were during their working years. Why? Because of the knowledge that they carry. So if they do start a small business out there, there are other means of contributing to these accounts to be able to invest in these particular types of alternative investments. It's like what you said, real estate is one of the most popular ones, So from that perspective, real estate is great. Why? Because you have two levels of growth. One is the growth in the equity of the particular investment, but also if that investment has income, is an income producing type of an investment, whether it be a single family home, multi-family dwelling, or an apartment complex, that income that is received is not taxed as long as it's paid to the IRA. And depending upon the type of IRA they do it under, which is what you're alluding to, traditional or Roth, how would you like it that not only the growth of the investment, if they decide to sell the investment, as well as the income, is tax what? Free for the rest of their lives.
Yeah.
I hope you don't mind. I got a little excited there. Tax-free means you pay nothing. That's wonderful. So some people are saying, you know what? I'd like to buy a piece of property under my IRA, but eventually I'd like to be able to live in it. Well, in a Roth IRA, as an example, if you buy your retirement home, as an example, you can distribute that eventually as long as you satisfy what we call the qualified distribution criteria. In other words, you must have had a Roth for 5 years and attain one of the four. Attainment of age 59 and a half, death, but you don't want that to happen, but it could happen, which means your beneficiaries will enjoy it. You also have disability. Some people who are not healthy, if you become permanently disabled, how would you like to distribute everything in your Roth after 5 years? Tax what? Tax-free again, right? There's only 19.1% of households that have Roths. That's shocking to me. Why? Because it's been around since 1998. So what does that tell me? I asked industry professionals out there, because not only do we train our own staff, we also train other financial institutions in the industry, because I did write a school for the American banking called the IRA Academy, which financial professionals attend so that they can understand the rules, the ins and outs of IRAs. Why? Because there's a growing amount of assets that are in IRAs, around $14 trillion retirement plans, are steadily growing, are moving towards the IRA world. So when you start taking a look at those questions, like, for example, is it better for me to have a traditional Roth? Courses like that will answer those questions for them, at least not answer it directly for them, but give them enough information to make an informed decision. So just to demystify again, IRAs are IRAs. Self-direction just means it allows for the payer, or it allows for the IRA holder to choose whatever it is that they want to hold under a retirement plan and keep it tax deferred.
Yeah, and the biggest hang up or risk of doing that self-dealing, basically taking funds out under the guise of a management fee or something like that, that can trip you up as an investor, can it?
It can, but just keep in mind, it's not a right to have an IRA, it's a privilege. That's why Congress enacted Section 4975 of the code, which basically outlines what self-dealing is. So the best way to get around that is just don't deal with yourself or any family member. Because the reason for that is if you're dealing with yourself or family member, it leads to being open to more abuse, right? So Uncle Sam says just deal with a third party. As a matter of fact, the IRS has devoted a portion of their website to what we call prohibited transaction rules. You cannot have a sale, exchange, lending, leasing, or extension of credit between yourself and your IRA. Of course, your IRA is receiving tax deferred benefits. So Uncle Sam says, stay away from those types of transactions, engage with somebody else. So there's enough property out there as an example that you can purchase with your retirement plan assets and enjoy everything that we're talking about.
Right. So the key here is don't engage in a prohibited transaction. And most of them
Correct.
deal with self-dealing, basically. And as long as you do that, then you're home free. And
Correct.
So Entrust is a custodian. You have your property in that IRA. You get statements, and Entrust takes care of all the filings, right?
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Well, not only does Entrust custody the assets, there are additional services she said that we could do on their behalf, such as you can actually have an internet website that's available to you to upload documentation, since given the fact that there's additional paperwork that's involved in certain investments like piece of real estate. Let me give you an example. Let's say you have a renter in there. Well, of course, you don't want the payment going to you. You want it to go to your IRA. So those types of processes are facilitated through a website, as an example. Let's say you wanted to update your house or hire a painter, as an example. Of course, the expenses on that IRA has to be paid from the IRA. So therefore, the facilitation of that process can also be handled electronically through a portal, or you can actually speak to a live individual, unlike some other providers out there. Some of the additional filings, you may have to involve somebody's tax or legal advisor, because we don't prepare some of the tax filings, because that's really the job of the a competent tax or legal advisor from that perspective that's guiding them through the process. We're just basically the gatekeepers, or I use this word sometimes, the babysitter of the asset, because if you don't have a babysitter, in other words, a custodian of your assets, then those assets could be determined to be taxable. That's the role that the Entrust Group does, is provide that platform, a custodial service, because we do have a trust company that's chartered under the state of Tennessee, which is regulated by the state of Tennessee, which the code requires.
Okay, so let's talk about checkbook IRAs. How does that work?
Okay.
What is it exactly?
Let me give you a brief overview of what checkbook means. IRAs generally do not have checkbooks. In other words, the IRA holder generally cannot sign checks out of an IRA, because whatever happens in the IRA, it's like Vegas. Whatever happens in the IRA, whether it be contributions or distributions, must be under the knowledge of the Internal Revenue Service. If an IRA has a checkbook, how is the custodian going to know what happened in that IRA? Because the IRA holder could just keep writing checks, right? But there was a court case called the Swanson case. That basically, the scenario on that one is Mr. Swanson set up an LLC and named himself as a general manager of that particular LLC. The IRA in turn funds that LLC. Now, if you have an LLC, you can create a checkbook. So therefore, all the assets are purchased by the LLC, even though 100% owner of the LLC is your IRA. So thus, that's where we get the term checkbook control. Now, there are other developments out there that's coming out that actually put some parameters or a box around those checkbooks. They're not launched yet. That eventually the IRA could actually have a checking account wherein the IRA holder could actually write checks out of those particular IRAs with the knowledge of the custodian. You have to put the parameters and technology in place in order for them to be able to do that. So all checkbook control means is that you can actually write checks from your IRA with a custodian just needing to know what happens in that particular checking account.
Right. And that LLC and In IRS tax parlance becomes a disregarded entity, so it doesn't have to file tax returns. Everything just goes into the IRA.
Generally, it does not have to file a tax return as long as the income that it's receiving is not what we call trade or business income. What does that mean? Some IRA holders may also invest in a business, and the business cannot have a competitive advantage just because it's under an IRA, right? So under the code, it says that if the transactions or the actions of the business is not related to your tax exemption. For example, an individual invests in a laundromat as an example. That's a trade or a business. The income from that trade or business will be taxable to the IRA under trust tax rates. However, keep in mind, the income of that business or the ownership of that IRA in that business will still exponentially grow a lot faster because it is tax deferred. So from that perspective, some people do invest in businesses as well under an IRA. Another good example is that, I don't know if you know this, but if a taxpayer does not have enough money to purchase a piece of real estate, as an example, that the IRA can actually borrow money. The type of loan that is associated with that particular transaction is what we call a non-recourse loan. However, the IRS does say that proportionately, the amount or percentage that the IRA borrowed to purchase that property will determine the taxation of the income it received. So, for example, you have a piece of property, it's $200,000, but your IRA only has $100,000. So in other words, you have 50% of a down payment to purchase that property. Uncle Sam says, find yourself a non-recourse loan lender, but that ratio between what the IRA owns and what was borrowed will determine the taxation of the income. So in other words, let's say the income is $20,000. Uncle Sam says $10,000 of that will not be taxable, but the other 10 will be. But eventually, keep in mind, as that IRA pays down that loan, that IRA will eventually own that own that particular piece of property outright. In other words, it's not going to owe any more taxes. In other words, you grew your investment without using your own money under the IRA. As a matter of fact, the IRS calls it unrealized debt financed income. This is where Entrust kind of delineates itself, between the other organizations, because our education is the forefront of what we provide as a service. We're not going to tell you what to do, but we're definitely going to equip you with enough information so that the taxpayer can make an informed decision.
Right. And that's what it's all about here. That's why we're doing this education. So you know your alternatives. You're not trapped in one particular investment vehicle that you might not want to be there. You might have a stranded 401k with a company you worked for 10 years ago. It's built up all this capital appreciation, and you don't want to just take the money out because then you're going to pay taxes. But then you could roll it over into a self-directed IRA, right? Correct.
There are exciting pieces of legislation that just, for example, has been passed in the House. It's not law yet because it still has to go through the Senate and before it gets the president signs it. For example, that prohibited transaction issue that we were talking about. One of the proposals that's in that bill that passed the House is that instead of disqualifying the IRA in the event that an IRA engaged in a prohibited transaction, because sometimes the IRA holder doesn't know whether or not they engaged in it. Instead of disqualifying the whole IRA, only the portion that engaged in the prohibited transaction will be taxable. In other words, it preserves a tax deferred status of the rest of your investment. So in other words, it's not as big of a risk, right? So from that perspective, required minimum distributions, there are proposals out there to reduce the penalties. They're really enticing individuals, especially the baby boomer generation, the ones that own most of the $14 trillion out there in the IRA world, to venture out a little bit. If you really want a diversified portfolio, I was talking to a registered investment advisor, a friend of mine, who said, if you really want to diversify your portfolio, if you're all in securities, it doesn't matter what securities you're invested, you're still in securities. It's not a diversified portfolio. He said, you're correct. But how do we do piece of real estate? Then that's when I started to educate them on, you can have other investments. You can have limited partnerships. You can have private placements. Again, some people are just trying to use some of their ancillary cash to invest in the next Facebook. Or if they have other friends that have this wonderful idea that's coming up right now, just want to seed into some angel funding. IRAs are a good source of that. Why is that? Because wouldn't you like your investment to grow exponentially, tax deferred, and sometimes even tax free, instead of having it grow and now you're going to get taxed on the income that you've received from a particular investment? Precious metals are also one of those investments that are becoming very popular. under the Small Business Jobs Protection Act of 1996, Congress actually allowed certain types of precious metals to be held under an IRA, particularly American Eagles, which is actually issued by the U.S. Mint. There are also other things as bullions. So people are wanting to invest in precious metals. Certain precious metals are allowable under the IRA world.
All right. Well, I think you covered a lot. I especially like precious metals. Many of you out there are precious metals investors. You haven't quite figured out how to do that in your IRA. And here you have a clear pathway to doing precious metals in your IRA and keeping the metals too. You don't have to put them with a custodian. Well, John, really appreciate you coming on. People want to connect with you, find out more about what Entrust can do. How do you do that?
We have a website, www.theentrustgroup.com. Again, it's www.theentrustgroup.com. Or you can contact me, JP Ruiz, JPRUIZ, at theentrustgroup.com. I'd love to chat with you and point you to one of our associates, depending upon what you need. I'd love to help you.
All right. Excellent. Well, we appreciate it. The link is in the show notes to this interview on financialsurvivalnetwork.com. If you've got a question for John and you want to shoot it to me, you can always do that. The email address is kl@kerrylutz.com. We'll get you an answer. And of course, make sure you sign up for your free newsletter. John, really appreciate you coming on, and we'll talk to you again soon.
Thank you, Kerry. Thanks for having me in your show.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.